Hey traders, welcome back to the Modest Money channel. Today I'm diving into a face-off between two heavyweights in the world of investment research, Seeking Alpha and Morningstar. Now, I've been around the block with a lot of different platforms, and these two are among the best out there. But which one is right for you? That's exactly what I'm going to attempt to figure out today. So here's the deal. I'm going to cut to the chase. Both Seeking Alpha and Morningstar are loaded with tools, insights, and data to help you become a smarter investor. You really can't go wrong with either, but they have different vibes. So depending on your style, one is probably better than the other. Seeking Alpha is like the Wild West of investment research, and I say that in a good way. Seeking Alpha is full of diverse opinions from a huge community of analysts, experts, and everyday investors. Morningstar, on the other hand, feels more to me like the calm, steady mentor, methodical, data-driven, and perfect if you're looking for some solid guidance to build a diversified portfolio. If you're on the fence about which platform to choose, stick with me. I'm going to break down the history, the philosophy, and the unique strengths of each to help you decide which one should be your go-to investment sidekick. All right, let's start with Seeking Alpha. Picture this. It's 2004, and a guy named David Jackson, who was working as a Wall Street analyst, gets a big idea. He's tired of the old school way of doing things and wants to shake things up. So he creates Seeking Alpha with one goal in mind: to democratize investment research. In other words, he wanted to level the playing field and make sure that every investor, not just the Wall Street pros, had access to high-quality research and insights. Since then, Seeking Alpha has grown into a massive community. We're talking over 20 million people visiting the site every month. What's really cool about it is that it's powered by over 7,000 contributors, including everyone from professional analysts to everyday investors like you and me. It's like a melting pot of financial wisdom, and honestly, that diversity is what makes it so valuable. I personally love the fact that Seeking Alpha doesn't shy away from different viewpoints. You'll find everything from bullish takes to bearish warnings, and sometimes those perspectives clash. But that's the beauty of it. There's always a new angle to consider, and you get to decide what makes the most sense for you. It's raw, it's real, and it's the ultimate way to see the full spectrum of investment opinions. Plus, they have author ratings, so you will quickly realize that not all opinions are created equal. If you thrive on community-driven insights and love diving into a sea of diverse opinions, Seeking Alpha might be just what you're looking for. Now, let's switch gears and talk about Morningstar. This one's got a bit of a different vibe, but founded on the same principles as Seeking Alpha, the democratization of financial information. The Morningstar origin story goes like this. Imagine it's 1984, and Joe Mansueto, a guy who is as passionate about investing as they come, decides that individual investors deserve the same quality of research that big institutional investors get. So he starts Morningstar right out of his Chicago apartment, armed with nothing more than a vision and a whole lot of determination. So started by a guy in his apartment, and fast forward to today, and Morningstar has grown into a global force with over 10,000 employees in 27 countries. They're like the old guard of investment research, reliable, thorough, and trusted by some of the biggest names in finance. The name Morningstar really does ring out in investment circles, and honestly, I get why. When you look at their research, it's clear that they take their time, analyze every little detail, and don't just throw out opinions for the sake of it. What I admire most about Morningstar is their commitment to independence and transparency. They don't have any hidden agendas, and their research is known for being incredibly unbiased. They're the kind of platform that makes you feel confident you're getting the full picture, whether you're looking into stocks, mutual funds, ETFs, or bonds. It's no wonder so many investors trust them for their investment decisions. If you're someone who likes a more structured approach, with detailed, data-driven analysis to back up your investment moves, Morningstar might be your new best friend. Okay, let's dive deep into what really matters, the features. When comparing Seeking Alpha and Morningstar, we're looking at two of the big boys in the investment research game, but they have slightly different offerings, depending on your investing style. Starting with Seeking Alpha, it's a stock research platform that feels like a bustling marketplace of ideas. You get access to thousands of contributors, from amateur investors to seasoned analysts. What's unique about Seeking Alpha is the way it taps into crowdsourced content to provide a diverse range of perspectives. I find this super valuable because sometimes those under-the-radar investment opportunities come from the most unexpected places. You'll find insights on everything from growth stocks to dividend stocks, which really helps if you like to explore different types of stock picks from contributors with truly diverse opinions. One of the standout features of Seeking Alpha is the Quant Ratings system. It uses a proprietary quantitative model to rate thousands of stocks on a scale from strong sell to strong buy. This system analyzes several factors like value, growth, profitability, and momentum. Basically, a complete package for anyone looking to make well-informed investment choices quickly. So, while seeking alpha might seem overwhelming due to the vast amount of information from diverse opinions, they also simplify things with their quant ratings. For me, the quant ratings are an invaluable tool when I'm short on time but still want to make data-driven decisions. Another thing I love is the stock screener. It's highly customizable, allowing you to filter thousands of stocks based on criteria like valuation, earnings estimate revisions, or even specific dividend grades. You can tailor your searches to match your personal investment style. Whether you're looking for undervalued stocks or top-rated stocks with high growth potential, you will be able to find it with Seeking Alpha. Once your results are displayed, you get to see those great quant ratings displayed right next to the stocks that match your criteria, allowing you to again further refine your search and spot those gems sparkling. Now, if you're the type of investor who appreciates in-depth analysis, Seeking Alpha's contributor model means you're getting real-time updates and actionable investment ideas from a community of over 7,000 contributors. And it's not just about the articles. There's a whole ecosystem of community engagement. You can discuss insights, challenge opinions, and follow expert contributors. It's a bit like having a social media network, but specifically for stock analysis and investment strategies. I've found that engaging with the community has often helped me spot potential red flags or validate my own analysis. Let's also not forget the portfolio tools. You can sync Seeking Alpha with your brokerage account, which allows you to receive real-time alerts and keep track of your investments. This can be a game changer for those who like to make quick moves based on market news or stock recommendations. One feature I really love is the article sidebar. It's a total game changer for navigating through content. Right next to the article, you get a quick snapshot of the stock price chart, key stock details, and even author ratings. This setup is super handy when you're trying to figure out which authors are legit and which ones might not be as reliable. You can instantly gauge market sentiment and get a feel for the author's credibility, which, let's be honest, is crucial when you're making those all-important investment decisions. Now, let's talk about Morningstar. Morningstar feels more like the go-to for those who crave expert-driven, thorough, and objective analysis. I think of it almost as having a trusted financial advisor on call. Morningstar's edge is in its in-depth analysis and research tools. They're known for their star rating system, which is a big deal, especially if you're into mutual funds or exchange-traded funds, ETFs. Their Morningstar Investor Service provides access to a wide array of fund ratings. This makes it easier to quickly assess the quality of an investment. For me, this tool has been a lifesaver when trying to build a diversified, lower-risk portfolio. One of my favorite tools is the Instant X-ray, which gives you a full breakdown of your investment portfolio. It's like having an MRI for your portfolio of stocks, revealing how diversified you truly are. You can see everything from asset allocation to sector weightings and potential risks. I find it especially useful for avoiding over-concentration in a particular stock or sector. This is essential for both individual investors and financial advisors who want to manage risk effectively. If you're looking to explore new investment opportunities, the screeners for stocks and funds are fantastic. They allow you to filter through thousands of stocks and funds based on various criteria like market cap, dividend yield, and even Morningstar's own quantitative ratings. I love how intuitive and easy to use these tools are. Trust me, not much of a learning curve here. And for those who are just getting started or want to stay up to date with the newest info, Morningstar's educational content is very thorough. Whether you're looking to understand basic investment strategies or dig deep into financial modeling, Morningstar has a wealth of resources. I've personally found their investing guides incredibly helpful, especially when I was trying to understand complex concepts like asset allocation or fundamental analysis. So, what's the bottom line on features? Seeking Alpha wins if you're into community engagement, diverse opinions, and want the flexibility to pick and choose which stock ideas resonate with you. Morningstar is your go-to if you want structured, expert-driven research and a well-rounded set of tools to help you make calculated, data-driven investing decisions. All right, let's break down the pricing because, at the end of the day, it has to make sense for your wallet, right? Seeking Alpha offers a range of options, which is great if you're looking for flexibility. You've got the basic plan, which is free but offers limited access. The Alpha Premium plan is $239 per year and provides access to advanced tools like the Quant Ratings, top-rated stock picks, and detailed investment analysis. Right now, if you use the link in the description, you can get the first month for only $4.95. Also, if you use my exclusive link in the description, you can get $25 off your membership. If you're a serious professional investor, you might consider the Pro subscription at $2,400 annually, which includes everything from Alpha Premium plus exclusive content like top ideas and a VIP service. Morningstar Investor is straightforward with its pricing: $249 per year or $34.95 per month. But there's a twist. With the code MM50, you can save $50, bringing the cost down to $199 for the first year. Plus, Morningstar offers a 7-day free trial, so you can test drive the service before committing. I always appreciate a free trial because it allows you to see if the platform matches your investment style without any risk. If you're all about maximizing value, Morningstar gives you a solid package for a reasonable price, especially if you're focused on mutual funds and want deep insights from seasoned analysts. But if you want more options and are willing to pay for a broader range of content and tools, Seeking Alpha offers a more customizable experience. So, which platform takes the crown in the battle of Seeking Alpha versus Morningstar? For me, it really depends on what kind of investor you are. If you're an intermediate to advanced investor who thrives on variety and community insights, Seeking Alpha might be your perfect match. With features like Alpha Premium and Quant Ratings, and market-beating stock recommendations and actionable investment ideas, it offers flexibility and depth for stock investors who want to stay ahead of market trends. On the other hand, if you're the type of investor who values a structured, methodical approach, Morningstar Investor is the way to go. With tools like Instant X-ray and Star Ratings, along with professional analyst ratings that provide deep dives into individual stocks, mutual funds, and ETFs, Morningstar is perfect for building a lower-risk portfolio and making informed decisions backed by thorough research. Ultimately, both platforms are great for different types of investors. Personally, Seeking Alpha is a better fit for me, but depending on the type of investor you are and your goals, Morningstar could be the better option. I hope this deep dive has helped you figure out which platform suits your needs best. Make sure to check out the links in the description for any discounts or to start your free trial. Thanks for joining me today. If you found this video helpful, don't forget to like and subscribe for more content. Until next time, happy investing.